Hey everyone, welcome to the Property Triangle. Today we've got two legends with me. I've got Aagam Jain, the broker who crunches numbers faster than ChatGPT, and I've got Amrit Budhrani, an accountant, numbers nerd, and wait for it, a new property investor. And I'm your host, Arpit Shah, buyer's agent and real estate buddy. He's a cracker. Amrit lives in Perth, and we helped him buy a cracker of an investment property in Bendigo, Victoria. Why? How? And was he terrified of investing interstate? Let's find out. We will start with some friendly, light-hearted, friendly fire. Agam, have you ever had a client ghost you after getting a pre-approval?
It's not common, but it happens. It happens, unfortunately. But it's okay. People's circumstances change, or they might find a better deal, but that's okay. You know, it's almost like you dodged a bullet that was eventually going to leave you later on, or maybe they just weren't in the right mind frame at that time. So, yeah, it happens. Yeah.
So how much do you think mindset sort of plays a role, when it comes to property investment?
Well, when I say mindset, what I mean is that they might be focusing on the wrong things, and they might have been shown a lollipop from another broker where it was a rate that sounded a little bit better, or a bit of a cashback, or maybe the broker offered their own commission to that client. It happens. And in that case, sometimes you just can't win,
Yeah. No, awesome. All right, Amrit, question for you. As an accountant, do you really believe in negative gearing, or it is just a tax strategy to confuse people?
I think negative gearing, I see negative gearing as a bit of a tool, not the first goal. So negative gearing, in my opinion, and having been a tax agent and accountant for over 15 years, I always say to all my clients, think of negative gearing as a bit of a bonus. Never invest in something for the sake of the negative gearing benefits. Now, to everyone listening, obviously negative gearing is simply just further tax refunds or reduction in your tax payable because you're getting that, you're basically claiming your investment loss against your income, and that's how you get the tax back effectively. But I always say to people, look, it's just purely think of it as a bonus. Never make a decision because of that. So I think it's purely a tool more than anything. In layman terms, negative gearing is effectively a bonus from the government because you've lost money in a particular financial year. So that it's a tool to, I suppose, jack up property investors. Considering, as we know in Australia at the moment, we've got a housing shortage. Now, can you imagine what will happen if they take that away? They've had that conversation, taking away negative gearing many times in the past, but as we all know, that never happened.
Yeah.
But the answer is pretty obvious of what will happen if they take that away.
Yep.
In terms of housing supply.
Yep. Awesome. Thank you. Let's be honest. How often do accountants kill a deal, and whether that would have actually made money? Have you had an instance where the client was like, look, here is a deal that I'm looking at. Which structure should I buy the property in? And then you would advise, no, probably that's property is not a great idea, whether that's the numbers didn't stack up or, yeah.
Look, I tend to stay away from of making that very important decision for the client. My role is to say, my role is predominantly to inform them of what is their tax implications.
Yep.
And also to some extent, how will this impact their personal cash flow? As long as they understood that, and most of them do, we deal with a lot of seasoned property investors, and most of them understand the risks involved and the potential a capital gain. So I rarely tell my clients to stay away from property investing, to be honest, unless unless, and I'm sure everyone can agree with this one, unless it's sort of very cyclical property property investing in mining towns, for example.
Yeah.
Then I always tell my
Everybody
clients,
has that.
yeah, exactly. Then I always tell my clients, look, you know, have a second thought.
Yeah.
I will never discourage you. You have your reasons in buying in such towns, but make sure you do your due diligence properly.
Yeah. All right. Broker versus accountant. Who gives more unsolicited advice to the client in the form of a general advice?
This is, I'll let you start first, Aagam.
Agam's given a fair few.
Who gives more unsolicited advice? I'd have to say brokers, probably. Because accountants, they don't get to see the transaction first, or they don't get to see the strategy first. I believe it would be a broker, because that's who's arranging the finance, right?
Yeah.
So they get to see the transaction first, or they're the first point of contact most of the time. So I guess based on that, and a lot of clients ask for the broker's opinions.
Yeah.
So there's like a lot of like, brokers said this, or why did brokers give advice? People always ask that question. And it's not that I give advice by any means, but but on the phone call, when a client calls you, they always say, oh, what do you think of this property? Or like, not always, but a lot of them do ask, what do you think of this property?
Yeah.
Now, I always say, well, this can be my opinion, but naturally that's going to end up in more brokers giving unsolicited advice.
Yeah.
But in that sense, it's not really unsolicited because the clients asked for it.
Yeah.
So whether the advice holds any value, that's probably questionable.
Yeah. Also nowadays, there's a lot of hybrid roles, right? Like when a client comes to you, they expect you to have some basic level of understanding. For example, client would come to me or to you and will ask us, which structure should I buy the property in? And looking at the numbers, and obviously we would have helped other clients, in the similar situation. So we can tell, okay, if it's a positive cash flow, good cash flow, maybe trust. If you're looking to do some negative gearing, personal names would suit. So that kind of advice we normally do provide. But yeah, like what about you?
Amrit? I think between sort of a mortgage broker, a finance broker, or an accountant, it comes. We know where to draw our lines well.
Yeah.
I think that's the key here. There are certain things that obviously I'm not aware of in terms of finance and lending and that sort of stuff, and that's where I give you a call or again, speak to your broker, and vice versa, right?
Yeah.
So in terms of giving unsolicited advice, I think first of all, it's what exactly the advice is meant to answer, like meant to solve.
Yeah.
And there's always, as I said, there's always that fine line between, who actually should be giving that advice on there. Look, I've had multiple clients that have told me, look, my lawyer gave me the advice, claim this in tax whatsoever,
Yeah.
but and I always say to that, well, lawyer, your lawyer is not your tax agent.
Correct.
You
Yeah.
know?
Yeah.
So you have to choose who should you trust.
Yep.
I always believe having a team is important, especially for property investors who want to scale their property portfolio.
Yep.
Having a team like us is crucial, and we bounce a lot between us. And look, I must admit, the both of you does have the both of you have a lot of knowledge in terms of tax structuring, etc. And that's great. That's where a team comes in. But in terms of the actual sort of official advice in terms of structuring, it usually should come from the right people.
Correct.
Yeah.
But again, having that team is fantastic, where we can bounce off with each other.
Absolutely. Now, I've had clients come to me as like, oh, don't invest in Victoria because my broker said Victoria is not a good place to invest, so that kind of stuff, you do get. All right, pick a side, cash flow or capital growth.
Right now, capital growth for myself.
Yeah.
I'm also capital growth for now.
Yeah. Yeah.
And the reason I think is pretty obvious is it's important to build our net worth first
Yeah.
before we are focused on consistent income from our investments, effectively, amongst other things.
Yeah, absolutely. I guess look, early on when you're looking to build your portfolio, focus should always be on capital growth. And then eventually when you're looking to consolidate your portfolio, that's when the focus should be a bit more passive income and cash flow. That's where I am now heading towards. I feel like I've got enough assets that I'm holding at the moment. So I'm looking to do both more active projects at this stage, just boost that cash flow up a little bit. And then eventually, after a few years down the line, once those investments have grown in value, looking to sell them off and then pay off the debt. And, those things comes into the picture, because then you let them kind of grow in value, and then that creates a real wealth for you. Positive cash flow properties, may put maybe $2,000-3,000 in your pocket every year. Doesn't mean anything, but that 100,000 capital growth is what everyone should be chasing. Yeah,
I totally second that. I do have a commercial property. It's just a straightforward office space.
Nice.
However, even though I said earlier, I'm still focused on building the net worth really. There's a non-financial reason why I did that, is to potentially one day move into there to operate my practice from. So usually with commercial premises, there are plenty of people out there, who run their own businesses who might need something for them, for their business, and renting for the next 20, 30 years doesn't really make sense if you know where your business is positioned.
Yeah.
Yeah.
Amazing. Sorry.
Well, what I was going to add is that, I think there's something important you said there where, at a certain stage you move from capital growth to cash flow.
Yeah.
But I think you actually create a separate category, which is something that you're doing, which is it's capital acceleration.
Yes, correct. Yeah.
So it's not cash flow,
Yes.
it's not capital growth, but it's acceleration, and you do that via development projects, or you do
Yes.
that by value add
Correct.
through a flip
Yeah.
or something like that. And I think that's something becoming much more popular,
Yeah.
because to some extent, I mean, you do as many loopholes as you can with lending and use trusts and everything, but you still hit a bottleneck somewhere. There's going to be a bottleneck, and that bottleneck probably will be capital at a certain point. And therefore, you might need to look at doing those capital accelerating strategies where you can build up a bit more of a capital base and then go on to hold, buy and hold through capital growth or cash flow, or a combination of both. So I guess I think there's almost a new category that's been created.
Yeah.
That it was always there, but now
always there.
there's ways that it's more accessible. Not everyone can do a development, but now at least more people can do a bit of a flip.
Yeah.
And that's benefiting the society, because there's more livable homes out there for people, like first home buyers, to occupy. So I think that's a pretty cool strategy. I'm keen to see how it works out.
Yeah, also since COVID, if you invested in the right areas, a lot of people have equity in the purchases as well. And sometimes you have enough equity to do these kind of active projects, but you may not have enough equity or enough borrowing capacity to go and buy another bigger asset as well. Obviously, with more assets that you buy, you've got maintenance and other upkeeps that keeps you sort of busy. So at the same time, you want to balance it with some sort of cash flow assets, which is balancing the portfolio out, and then at the same time looking at the acceleration sort of strategies to boost that particular cash flow. And then eventually 5-10 years down the line, or as if you get closer to your retirement, you should be looking at more sort of converting that into a passive income sort of sources. Awesome.
And to add to that, as you move closer to retirement, the common strategy is to reshift your assets and your wealth into the superannuation system. Where
that could be one of the options.
Where it's a much better tax environment for people to continue earning earnings from their investments, whether it's property or shares or any other asset class, without really paying a hell lot of tax.
Yeah. Absolutely. All right, we're gonna bust some myths. You should only invest in the areas you're familiar with.
Myth, 100%.
I agree. I think it's a myth as well.
Yeah.
To the listeners listening, I am from Perth. I've recently acquired a property in Victoria. So that's totally a myth that you have to stick on.
We're gonna talk a bit more about that one as well, but definitely don't you just don't need to invest where you live. Australia is a big country. I mean, there's plenty of different markets at a given point of time, depending upon your budget, your strategy, your risk appetite. There could be several different markets that you can explore. Look outside your backyard. There's other markets for you to buy property in. Yeah.
100%. 100%.
All right. Interest rates are too high at the moment. It's not the time to invest right now.
Yeah, this is a conversation I have a lot, but luckily I deal with mostly investors and they understand that this is a complete myth because as interest rates go down, the demand only gets higher and the prices get higher. So you wait, but you pay a higher price for waiting.
Correct.
And to add on to that, higher interest means higher tax deduction.
Yeah.
So if you do the numbers in full circle, taking into account the tax benefits from it, it doesn't really affect the longer vision of building that wealth through property.
It's when you're ready. It's not when the interest rates are ready. It's when at current interest rates, your numbers say that even at the deficit, whatever deficit you're expecting from holding a property, even if you buffer that with an extra K or extra interest rate percentage or two, and you say, yeah, I could handle that without being, hand to mouth, that means you're ready.
You're ready. Correct. Yeah. No, that's a great way to kind of explain. And, obviously everyone's got, different way of feeling, that level of comfort. Some people want to see that 100K sitting in the offset, that's their level of comfort. Yeah. And for some people, it's like, $10,000 every property as a buffer for any maintenance, that could be, giving them comfort. There is no right or wrong at the end of the day. But like when you're ready with your mindset, with your finance, it's a great time to be investing into property because we all know prices are not coming down. Yeah. All right, great. Property in regional areas are too risky. What if they remain vacant?
Yeah, that's a complete myth. I mean, they can, but overall, that's a myth.
I agree. I think, look, unless it also depends, in my opinion, it also depends on where regional.
Yeah.
I don't believe that all regional towns are bad investments. It's in fact the opposite. Because let's face it, again, as we discussed before, there's a housing shortage overall in Australia. We all know that. For affordability issues, there will always be a demand of moving away from capital cities into regional towns, and good regional towns, of course.
Yeah.
With there are plenty of regional towns, Victoria including, where there's amazing facilities in that particular town.
Correct. Yeah. I mean, we've got a bit of a rule when it comes to this. We invest a lot in regional areas for a lot of our clients. Again, if you want to build a portfolio of properties, if you want to acquire multiple properties, you can only do that by investing in regional areas. A lot of people only have limited borrowing capacity where they can not go and invest in capital cities where the yields are maybe 3 or 3.5%. And if you do need that 4.5%, 5%, you will have to look at regional towns. Our rule is simple. We target regional towns that have got a good population size, that have got universities, hospitals, diversified economy. That mitigates our risk in terms of, so we don't go and invest in mining towns and one-dimensional economies. So we look for that diversification. That gives us that level of comfort. Yeah, it's not a capital city, but looking at the other data factors where it can be vacancy rate or the demand-supply matrix that we look at, that gives us confidence saying, we can go ahead and invest in that regional area because at the end of the day, it's a vehicle for us to build wealth. We may not choose to go and live there, but at the same time, if we can build wealth through by investing there, capital growth occurs, and we are balancing our cash flow at the same time because again, regional areas have better rental yields than capital city. It's a great way to build your portfolio and a more sustainable way as well. Yeah. Alrighty. Accountants versus brokers. One more question regarding that. If I can. Yeah. Accountants and brokers always agree on financial strategy. Have you ever had a argument with a client where their accountant would have suggested something else and you say, no, that's probably not the great strategy for you?
Yeah, it's never not escalated to an argument, but an argument that I've had with accountant for a client would probably be them safeguarding their client way too much, perhaps with taking on debt, because, and that's their opinion. It's not advice.
Yeah.
Right. It's their opinion that this person should not take on debt so early because they're just a student or they're just starting out their property portfolio, because eventually that property is going to allow them much more flexibility, assuming it does well.
Yeah.
It's like one of our mutual clients who is fairly young and he's a good friend of mine, but, he was a bit safeguarded by his accountant that, you shouldn't take on too much debt, you're young, you will want to travel, you'll want to do these things, you might change your mind on career. But it was very fortunate that this client was, he knew what he wanted and he was okay with those downsides that the accountant was suggesting, which was fair enough, they're entitled to their opinion, but he preferred a much aggressive approach of, building a portfolio, starting young and, going hard. But I guess those opinions for someone else who is more susceptible or really trust that person could negatively impact them or hold them back from making that decision.
Absolutely, yeah.
And I know it's a good decision because of the results. I've seen it for other clients as well as myself. Like I've seen the results that you can get in a very short period of time that can really set you up for bigger opportunities instead of hold you back.
Yeah.
But that all comes down to you selecting the right asset, which is what you specialize in. And without a guidance of someone like yourself as a buyer's agent, they can take that same amount of debt and put it in the wrong asset.
Yes.
And go downhill.
Yeah, I think, and that's where a lot of advice that you get from professionals, they're coming from their life experiences as well. Exactly. And, again, using a buyer's agent, again, it's a fairly new concept. It used to be for the rich folks, the doctors and the business, people who are really busy would engage. But now it's becoming like, everybody is starting to see a lot more value in using buyer advocates, and when they see the results, they're like, okay, we can also start building, portfolios. And, it's not just about one purchase, but every property that you add to your portfolio is creating this foundation for that long-term wealth creation. So it's so important to get it right, especially the initial first few properties. It's very important to get that right. And once you lay a solid foundation, then property number 1, 2, and 3 will work for the property number 4, 5, 6.
Yeah, exactly.
I think if we bring it down to basics, I would say most Australians would understand the difference between bad debt and good debt, right? I think once you understand that, and once you understand, especially if you've bought your first property and you understood, okay, taking on $400,000-$500,000 in loan actually got me somewhere. And once they've started their first one, and they understood the impact on them and on on their wealth, then they're more comfortable in thinking, okay, this is actually not a bad idea at all. This is in fact one of the best ideas one of the best things I've done. Including first-home buyers. That's how wealth starts. Yeah. That's one of the ways wealth starts in Australia.
100%.
Absolutely. Yeah, it's just like, overcoming that fear of taking on debt. Again, it's also important, regardless whether you're buying your home or property to live in or to invest. Again, you're taking on debt, right? So it's very important to develop that mindset. Again, the good thing right now is there's so much education, there's so much content available out there that a lot of people are getting educated and are absorbing that content, which helps them kind of overcome that fear. And then, they don't make the same mistakes that probably, I made when I bought my first property. You know, like a lot of people make those type of mistakes, maybe buying, you know, off the plan or apartments, or, you know, buy in the wrong locations, whatever, you know. So those kind of things, you know, a lot of people are, you know, identifying where things can go wrong and are avoiding those mistakes and are setting them up. Like I see, you know, we've helped a few guys right now who are in their early 20s, and you can just see how their future is going to be a lot more solid and, you know, stable, because these properties that they're buying right now will help them so much when they get to their 30s and 40s, you know.
Correct. Yeah, and these guys are young professionals. So for all I know, like, you know, this growth in 4 or 5 years when they've actually really worked their way up in their own professional capacity, like if they're starting out to be a lawyer, for example, we have a mutual client who's starting out to be a lawyer, you know, 4 or 5 years down the line, if his property is able to at least, you know, do 1.5 times increase, most likely it could probably hit 2 times, but even on a conservative 1.5 times, he'll have enough equity to potentially, you know, buy into a law firm, or, you know, maybe something way further down the line. But it's like if he gets presented an opportunity where he needs to invest some money as well, but accelerate his own career, he has the asset to back him up to help him do that. Otherwise, you know, you go for a business loan, or you just simply can't really access that opportunity. So there's a lot of people, and I'm seeing it a lot now, where a lot of clients who've done well in property now want to use that to increase their income. So then they take that equity out and potentially buy a business that they run. Then they, you know, so this is like...
Interesting. Yeah, very interesting.
Imagine if people said, you know, don't take too much debt. Well, then they wouldn't have been able to do these things.
You can't just do that off savings.
There's no way you can save $1 million that easily.
Correct.
100%.
All right, that moves up to the next segment, rapid fire. So I'm going to ask a question, and I expect an answer within 10 seconds, right? Okay, so it has to be quick. All right, first question to you. What is the first thing that you would buy when you hit 10 million net worth?
Commercial property.
Wow. How much? What will be the
10
value?
million net worth, as in I'd have 10 million cash. So
correct.
Yeah, probably nice, maybe 10, 15 million dollar, and I'll keep the rest cash with myself. Yeah.
All right. Dream location to retire in?
Perth, where I live.
Really? Not too far. But any particular suburb or any?
Oh, definitely. If it was me having, you know, say 10 million of net worth, I'd move to the more beachside suburbs like Trig, North Beach, City Beach of Perth, where the beach is just walking distance.
Awesome. Yeah. West Coast. Most underrated suburb in Australia right now to invest in?
Underrated suburb in Australia.
What was the last one that you saw a client buying and then you thought, yep.
That's not a 10-second question, mate.
Pick a region, maybe a state.
I'd say the Peninsula.
Okay, Mornington Peninsula. Okay, Peninsula. Interesting. Yeah, sure. I'll take that. All right. Worst financial advice you've ever given to someone?
Worst financial advice that I've given to someone?
Or have you ever heard from someone?
Don't buy this property.
Don't buy this property? Okay. Yeah, all right. Fixed or variable loans?
Oh, that's a tough one. More likely than not variable.
Yeah. All right. Yeah, I'm a variable kind of a guy. Texting or calling agents, what's more effective?
Ooh, I think overall calling would be much more efficient and more productive, I suppose.
Yeah. Who's most likely to send a meme at midnight? Agent, broker, or accountant out of the three of us?
Agent, broker, or accountant? I'd say probably the broker.
Is it? Okay.
I think it's
probably.
I agree. I think it's the agent. All right. Awesome. Thank you so much. All right. We're going to talk about some investment stories. So obviously Amrit purchased his, investment property Interstate, and obviously you did the finance for him as well. So Amrit, I just want to, get your sort of, get into your mindset, right? What was sort of going through your mind when I said, let's look at Bendigo as a region to invest in?
Being my first time investing not in capital cities, to be honest, I obviously had my reservation.
Yep.
However, after speaking to you and after understanding after understanding the historical performance,
Yep.
Vacancy rates, the growth over the last 3 or 4 years, I saw some indication of the fact that, okay, the only way this region would go is up.
Yeah.
It might take a while. We don't know. None of us have the crystal ball,
Yep.
but it has some indications of there will be growth. That
Yep.
there's bound to be growth.
Yep.
And obviously with your assurity, and assistance with choosing the right obviously location, suburb, etc.
Yeah.
And I thought, okay, well, I felt the need to diversify across different states and not looking just at your backyard. That's where I stood effectively. Yeah.
I remember we had a few hesitations that we were comparing Bendigo with Bunbury. They all start with B as well, both of them. And obviously we had some late night calls and the doubts and the Google Maps sort of zoom in and things like that. And we go through that with a lot of clients because we understand like you're not physically, you haven't been to that location, so it's a lot hard to picture. But yeah, when we put things into perspective, there's population everywhere, there's economy which is flourishing everywhere, there's people living everywhere, people wanting to live, there's the lack of supply in some of these places, there's the shortages of property, there's demand through the roof. So all of these things play a much bigger role in terms of familiarity is not one of the factors, unfortunately, that we would look at, but we look at all the demand and supply matrix.
And obviously not to mention you both live in Victoria, you both live in Melbourne, so that's also a side note, a level of comfort.
So I want to just run through some stats of why we chose this is a suburb called California Gully in Bendigo. Why did we choose California Gully, right? So first of all, you've got the stock on market 0.4%. So there's only 0.4% stock currently on the market. In terms of vacancy rate, it's sitting at 0.6% at the moment. So anything less than 2% is considered really good from a threshold. This is less than 1%, which just means it's easier to find a tenant, if you're looking to rent your property out. The rental yield, 5.2%. So really good rental yield. Again, comparing that to a capital city, you're looking at about 3.5% rental yield. In terms of days on market, it takes roughly 35 days for a property to sell. So again, 1 month for a typical property to sell, and that's considered really good. For a market that's not very hot, it will be more like 60 to 90 days, generally speaking. So that was the sort of main reasons why we chose this particular market, just talking about the demand. And then just in general, Bendigo overall, as we were talking earlier, it's got a very good, economic diversity. There's a lot of focus on health. So yeah, we invested a lot in Bendigo. We bought more than 25 properties in Bendigo. So we're quite bullish on that particular market, and just Victoria as a state in general. We're buying a lot in Melbourne as well. But yeah, Bendigo is one of those towns, like before this, it was Townsville was our sort of go-to market in Queensland. So I'm looking at Bendigo and it's like Bendigo is the next Townsville, at the moment. Amazing. All right, let's move on. So just one piece of advice that you would give to someone who's sitting on the fence about investing in property.
One piece of advice. Understand your borrowing capacity first. Have a chat with a broker, I think. And then from there, talk to a good buyer's agent so you can figure out, what's the best type of asset to buy, or do the research yourself.
Yeah.
But I think number one step is always figure out your borrowing capacity, because, if you go the other way, where you go to the accountant and then you go to the buyer's agent first, you may be very ready to go, but until you come to the broker and really understand your borrowing capacity, you won't know what strategy to follow, or what way to structure the loan, because it really comes down. The starting point, I truly believe, has to be the borrowing capacity. Because you could have all the structures in the world, or there could be an advice that is given that do this structure, but it is all borrowing capacity permitting. To access that structure. So I think you got to start with understanding what is your base, what is the sort of range, the maximum range that you're working with from your big banks to your third tier banks, and then you take that advice, and hopefully a good broker will direct you to the right person or direct you to the next professional to then get things validated on how to structure it, as well as then also to the right professional who can help you buy the right property or the best property.
Yes. Look, I'd second that. And a follow-on to that is obviously understanding, and we're obviously talking about property investing in particular, understanding the tax implications and how does that impact? And what will it be after the first purchase? What does that look like?
Exactly.
And is it really beneficial to buy it under your own name? And that's the conversations. We all tend to have, do you buy it under individual name? Do you buy it under trust, companies? At what phase in your life in terms of your risk factors as well, right? So that all plays a part, really.
No, absolutely. I mean, my perspective is slightly different, and we touched upon that previously. For anyone who's on the fence, a lot of time it's not really, their finance or borrowing is their mindset. So I keep coming back, like where there is a will, there is a way. Like if somebody is willing to buy a property, I'm sure you'll find creative ways for them to, find that lending. There might be a lender who's charging 1% extra rate, but will give them extra 200K, which will help them buy a property. So again, the most important thing is to take action, get educated, get knowledge, develop your trust in people who are helping you as well. And then at the end of the day, most important thing is to take action. And you will only thank yourself in a few years' time once, those properties perform as well. Awesome. And Aagam, where can people find you?
They can find me on my website at www.faygro.com.au. That's faygro.com.au. And I'm all over Instagram under Finance As You Grow, Instagram, TikTok, Facebook, everywhere. So
awesome. Amrit?
So www.virtueadvisory.com.au. So so anyone wanting sort of, even if a second opinion or understanding tax implications, accounting, etc., it's easy enough to reach me through there. However, considering I'm sitting with you both have obviously my contacts and understand how I work. So there's a bit of a leverage there. So that's also another channel to get in touch with me.
And Amrit, is there a second property in the pipeline? I know we were chatting about that.
There will be. There certainly will be. And whether it will be in Victoria or another state, I think let's revisit that in as soon as we're ready and as soon as the performance of this one where that sits, and I'm always ready to get on the second one.
Amazing. Well, thank you both for joining in, and to everyone who's joining into this podcast as well. If you found value, please do share this video with your mates. Anybody who is sitting on the fence, a bit scared about investing into property or investing interstate, would be a good value add to them. Until then, stay smart, stay invested, and this is Arpit Shah from BuyerBud. That's it.